My name is Sid Haas. I'm the Vice President of Business Development at LKCS, and I wanted to thank you for joining our presentation today. We're going to be discussing pre-screen credit campaigns and how to leverage the credit bureau's data to attract new loan business, to your financial institutions. And we're going to also be talking about 7 or 8 things that the bureaus don't necessarily want you to know about. They don't tell you certain things. So we're going to share some of those tips and tricks that we've learned along the way. For those of you not familiar with LKCS, I want to give you a brief introduction to the company. We've actually been working for financial institutions since 1961. And all of our products and services are designed around your marketing and communications needs. So while we started back in the early 60s as a commercial printing and mailing company, we've grown into a wide range of areas. And really our focus for the last 15 years or so has been on utilizing data, all sorts of data, to improve the return on investment that our customers see from their marketing dollars. So you'll see today that we offer not only still the printing and mailing services, we offer a whole suite of electronic services, web development, electronic marketing, social media, and we also offer a lot of one-to-one marketing solutions, and we also actually process statements and e-statements for about 200 institutions on a monthly basis. But the credit pre-screen campaign fits in directly with what we do in a lot of ways. We'll be discussing how we can extend these pre-screen campaigns through all of those different media channels that you may currently be utilizing. So to give you an introduction, not all of you may be familiar with what a credit prospecting campaign or a credit pre-screen campaign is, but what we're doing with these types of campaigns is we're using credit bureau data, credit scores, and all sorts of other credit parameters to identify those people that meet your criteria and that would also be most likely to be looking to borrow, from a lender. We can use this data to market to existing account holders or to prospective account holders in the communities that you serve. And, I'll show you some specific examples, but these campaigns can be pretty broad reaching or they can be pinpoint specific. I mean, we can identify very specific attributes and very specific scenarios with this type of credit data. The credit data can be used to promote any type of loan that you have, whether that's any type of mortgage or home equity loan or line of credit, any type of auto loan, whether it's a new loan or refinance loan, anything like that. We can use them for a credit card, lending, and any type of consumer loan. So there's literally hundreds of different credit data fields that we can leverage to really find the best, group of potential borrowers for you. Unfortunately, however, we do not have access, or the credit unions or the credit bureaus, don't have access to commercial lending data. So this is really used only on the retail or consumer lending side of things, as there is no commercial data available. So when we talk about pre-screen campaigns, there's a lot of misconceptions out there about what a pre-screen campaign is. So I'll share with you that a pre-screen campaign, again, uses a group of credit characteristics to target qualified borrowers, right? What they are not is that these are not guaranteed approvals. All borrowers, all potential borrowers will still need to apply. They'll still need to fill out your complete loan application and meet all of your underwriting criteria. So even if you tell somebody that they are pre-approved, using that word pre-approved, all of the disclosures, everything in place on the mail pieces or emails or anything that we're using as part of these campaigns will explain the fact that, we'll talk about this again further, but it will explain, to the recipient that they meet your initial lending criteria from what you know about them, but they still need to meet all of the other criteria, and go through that full application process. So we get a lot of questions about that, and I wanted to make that absolutely clear that even, we can use other words than pre-approved, and we'll discuss that also, but even if you tell a recipient that they're pre-approved, that they still have to go through all of your applications, and all of your criteria, and if at any point along the way you would normally decline them for a loan, you absolutely still have the right to do so. So let's talk about credit prospecting campaigns a little further, and we'll discuss some examples and show you how we can use these. But again, the concept is that we'll extend a pre-approved or a pre-qualified offer of credit to existing account holders or prospective account holders based on their actual credit score and other credit data information. You will have the ability to set all of the different criteria that you want to use to identify people that would qualify for your loan. So we're talking about criteria, again, such as FICO score, looking at any, derogatories, bankruptcies, repossessions, foreclosures, looking at payment histories, looking at existing loan balances and existing loan terms potentially, all sorts of different things. We can look at other loan relationships that people have at other financial institutions and use that information to offer refinancing of those existing loans. And again, I'll show you lots of examples here going forward, but just different ways that you have the ability to set this criteria. And obviously we can help you determine which criteria are most appropriate for any campaign that you're planning. These offers of credit, these credit pre-screen campaigns, they can be sent via direct mail. As letters, that's probably most common. They can be sent by email. We have more and more of our customers sending these offers out by email to existing account holders. Obviously, it's very inexpensive, it's immediate, and it's measurable. So email is a terrific way to reach these. We are incorporating these types of pre-screen campaigns right directly within our statements and e-statements. So I'll show you a sample of that moving forward as well. But as part of that statement, as the first page maybe of your monthly or quarterly account statement, if you're eligible for some type of credit offer, you could actually see that as the first page of your statement or e-statement. And you can also make outbound phone calls to these individuals. So we can provide lists, with the phone numbers you have on file, with phone numbers that the credit bureaus have on file, all screened against the do not call list and things like that, so that if you had, lenders that, or loan officers that were looking to make phone calls, or a call center that you wanted to utilize, to make outbound phone calls, you can certainly do that. We can help you with the phone scripts and all the things that you need to execute those types of telemarketing campaigns. And LKCS also has a solution that we call DataFlex, which is our reporting engine, so we can help you measure the results of these campaigns. We'll be able to show you, and we'll talk about this again further, but we'll be able to show you exactly how many loans you closed as a result of any of these campaigns, what the balances of those loans were, and things like that, to help you measure that return on investment. So I'll share some examples just to give you an idea of the data that's available from the bureaus and how we can use that data to effectively target, and generate some loans for your institutions. So these are just examples, and I use them because I think they're good examples, but they may not be necessarily appropriate for everyone that's on the webinar today. So just realize that they're examples, and we can adjust the parameters. We can use different parameters. Again, any type of loan, any goal that you have, to generate a certain type of loan, or add business in a certain area, we can help you identify the appropriate criteria to use, and the appropriate universe to send that campaign to. So I'll start with auto refinancing. It's a hotbed of activity. We have a lot of customers, that use this data to refinance auto loans regularly. And most common is what I'm calling here on the left a loan payoff or an auto loan recapture type campaign, where in this example it's showing that we're looking for FICO scores of 640 and up, maybe it's 680 and up at your institution, but whatever that number is. We can obviously exclude anybody that has late payments on their existing auto loans, any history of repossessions, bankruptcies, things like that. We can look for people that have specifically, at least 2 to 3 years left on their loan, or an existing balance, a current balance of at least $10,000 on the loan, wherever it makes sense, for you. And more specifically, based on their credit score and your rates and the term left on their existing loan, we can show them, we can identify those people that would save at least maybe $25 or $30 a month on their auto loan payment. So that mail piece or that email that we're going to send out would actually be able to have a payment scenario showing them an approximation of their current loan and their current loan payment and what that loan payment and savings would be by refinancing with your institution. Also along the line of auto refis, we're seeing that more and more people are leasing their vehicles. Right? They want the fancier vehicles, the more expensive vehicles. Cars are getting more expensive in general, and lease offers are very attractive to certain people. So we're seeing a higher number of people that are leasing. It may not be the best financial situation for everybody, the best decision, but we can identify those people that maybe have 3 to 6 months left on their existing lease, and again, meet your FICO score requirements and all the other credit history type requirements. Identify those people that have a lease coming due. We know that they're going to be in the market for a vehicle. They're either going to purchase the vehicle they're currently leasing, they're going to lease another vehicle, or they're going to purchase another vehicle. Well, we can get to them before they start going to the dealer and explain to them that they're already pre-qualified for a loan with your institution, and tell them obviously why maybe leasing isn't the best decision for them. So those are two examples of auto refinance type campaigns. If you're looking for mortgage refis, again, this is still, there's still a lot of opportunity for conventional mortgage refis. It's amazing whenever I look how many people haven't refinanced in the last 4 or 5 or 6 years. We can find those people. We can find those people that are your account holders. We can find those people that live, in your areas. But again, meet your credit score requirements, have existing mortgage balances in your sweet spot. We can eliminate anybody with an FHA or a VA or a reverse mortgage, any of the types of those mortgages that, wouldn't be good opportunities for refinancing. We can take those out. Look for people that haven't refinanced in the last, few years. And again, just like we were doing on the auto side of things, find those people that we can save maybe at least $100 a month on their mortgage loan. There's also a lot of people that may have relatively low mortgage balances, very low LTVs, that don't want to pay the closing costs associated with a conventional mortgage refinance, but may have a significantly higher rate than they could have now. That may be an opportunity for you to actually refinance their mortgage with a home equity loan in the first position. So we can find the people, again, that meet very specific conditions for different types of loan offers. When it comes to credit cards, obviously balance transfer campaigns, we can look again not only at credit score and credit history, but look at people with existing, retail card and credit card debt over a certain amount. We can look at what their balance ratios are, so we can make sure that, that they're not using maybe all of the credit that's available to them, so they're responsible with their credit, but they're still carrying a high level of debt. And we can offer to either transfer that balance to a credit card, or we can turn it into a home equity offer. Look at, who has that credit card debt and who also has available equity. And we'll talk about that example again. So I like to layer these campaigns together, and I find that that's very successful. So I'm going to share one example of how we do that. And again, it shows you some of the flexibility that we have with this type of data and these types of campaigns. So the first offer we might be wanting to send out is a first-time home buyers offer. We're going to identify your account holders that are renters, right? First off, we're going to find out who's renting. We're going to find out who meets your credit score and, all the other credit parameters. And we're going to send them an offer for a mortgage and explain why now is a great time to buy and why they may want to stop renting and paying their landlord what they could be using for a mortgage payment. At the same time, obviously not everybody that's, has an account with you is a renter. So we can look for homeowners, maybe that have available equity in their home over $50,000, let's say, but maybe they're carrying that credit card debt as we talked about a few minutes ago. Maybe they're carrying, say, $10,000 in credit card debt. Well, that's a very good match for us, right? We qualify them by FICO score. We look at all the other credit parameters, get the derogatories out and all of those types of things. And now we can extend a home equity offer, but word it as, a debt consolidation or a debt reduction offer. Show them, show these people potentially what they might be saving on a monthly basis by getting rid of that high rate credit card debt and putting it into a home equity loan, right? And not every one of your customers is going to fall into that situation. You may have a lot of other homeowners that maybe have that same $50,000 in equity, don't already have a home equity loan or a HELOC with you, but maybe they're not carrying that credit card debt. So we can extend a more generalized home equity offer, or we can look for those people that maybe have high school or college age children and talk about college financing with home equity money. All of those types of things. We can continue to layer these offers on top of each other and, extend very specific offers to the right people. What we're doing here is, at the end of the day, especially these last two are the same loan. It's the same benefit to your institution. They're both home equity loans. The first one's a mortgage. But by making that language specific to that recipient situation, we're going to increase the response because we're going to talk to that potential borrower exactly the right way. We know the exact situation they're in. We're going to make sure that that mail piece or that email or that phone call that we're making out to them is relevant as can be to their specific financial situation. To give you ideas of what these look like, these are very often sent out as direct mailers. So in this case, this would be like a fold-over type mailer. This is that first-time home buyers type offer. Everything that we do, by the way, is custom designed. It's custom written. So these aren't templates, but these are just some, kind of generalized samples just to give you some visual ideas of what these look like. So this would be what a direct mailer could look like. Very frequently, these are sent out as personalized letters, or what we also call the statement cover letters. So when I mentioned earlier that we include these with our statements and e-statements, this would actually be included as the first page of an account holder statement or electronic statement. On the left, you'll see the revolving debt reduction offer, and on the right is the general home equity offer, but you're seeing terms, like they're pre-qualified. You're seeing some of the disclosures that need to be in place on these mail pieces and things for the credit bureaus. And we'll talk about that. And these are also, like I already mentioned, sent out. The credit bureaus are totally fine with you sending these out via email. And that's obviously a terrific way to send these things out, even in conjunction with a direct mail piece or a phone call. We have some customers that send the email first, and then they look to see, because email marketing is measurable for those of you that are already sending email, we can see not only who we've sent the email to, but who's read the email, how many times they've read the email, who's clicked on links within the message. So we can look, maybe a day after we send this email, find those people that read it at least 2 or 3 times, that maybe clicked on a link, and then give that list of people to our loan officers to make the outbound phone calls. So in this case, we can use the email to further qualify potential borrowers and now give a really qualified list of phone numbers to start calling, because we know that, Sid Haas read this email message 4 times and he clicked on the link to visit, our mortgage loan page, but he hasn't called yet to apply. So we can give him a call and, and ask him if he's seen our offer, and let him know that he's pre-qualified, for that mortgage loan. Okay. So whenever we use credit data, there are some requirements around using it. And I mentioned already the disclosure that we saw in some of those mail pieces. So you obviously, like we've discussed, have that ability to specify your lending guidelines to make sure that we're only sending these offers to people that meet, your credit criteria, your guidelines for loans. But what we do have to do to be compliant with the Fair Credit Reporting Act is we have to send out what's known as a firm offer of credit. We have to tell the recipient of this mail piece or email or phone call that that they've been pre-selected or pre-qualified or pre-approved for a specific type of loan, literally using language such as what type of loan it is, what minimum amount they've been pre-approved for, what the rate might be, all of those types of things. We can't just say, hey, have you heard about our auto loans? We have to let them know that they've been pre-qualified for an auto loan at a rate as low as 1.9% for 60 months, that type of language. So when we use this data, again, we have to indicate that the recipient is pre-selected, pre-screened, pre-qualified, pre-approved. There's other words we can use as well, but those words are all used interchangeably. So if you're not comfortable with the word pre-approved, you don't have to use it. We include terms and conditions and eligibility requirements, which include why that credit may not be extended after we've already told somebody that they're pre-qualified or pre-approved for a loan. Remember what I said earlier, that all potential borrowers still have to go through your full application and approval process. That does not go away. We have to let them know the minimum dollar amount for which they've been qualified. In the fine print, we at least have to disclose a range of potential rates. There's lots of different ways to meet these requirements, but these are the requirements that are on there. And the credit bureaus do have a specific opt-out notice and disclosure to tell recipients, if they don't want to receive these types of offers from any company nationwide, what they need to do. They can visit a website, they can call an 800 number. That's all managed by the credit bureaus working together. So that opt-out notice is a requirement of these types of offers. And we help with all of that. So, we help you make sure that your mail pieces and your emails and your phone scripts meet all of these requirements. We're very familiar with the requirements and the regulations. We'll share them all with you and explain them all to you. But we can help you craft those, and we actually send all of the materials into the bureaus to get them approved as well, to make sure that everything is compliant with the Fair Credit Reporting Act. So when we're actually going to obtain credit bureau data, you have two options, right? You can purchase the data directly from one or more of the credit bureaus. You can absolutely call Experian, Equifax, or TransUnion, talk to your rep there, and say, we're interested in doing a pre-screen campaign. Can you help me out? Can you get me the paperwork I need? Can you run some counts for me? Can you tell me what this is going to cost? Or you can purchase the data from a third-party company, such as LKCS. Now, any third parties that can sell you that data, we have to go through a whole vetting process with the bureaus, which obviously we've already gone through. So not just anybody can sell you the data, but there are, I'm sure a significant number of third-party companies like LKCS that can sell, and that can provide this credit data to you. So just know that those are your two options to get the credit data. You can buy it from the bureaus directly, or you can purchase it from us. So obviously it makes sense. Why would you purchase the credit bureau's data from a third party? If we're going to buy the credit bureau's data, it just makes sense that I would buy it directly from the bureau. But in reality, that's not necessarily the case. And those are the things that they don't want you to know. So I'm going to start sharing reasons why you should consider and would probably prefer to purchase data from a third party, whether it's LKCS or any one of the other third-party vendors that have the ability to provide that credit bureau data. So reason number one, I guess the first thing that the credit bureaus won't tell you is that you'll actually get better customer service from a third party such as LKCS. The bureaus are excellent at what they do, and they manage massive amounts of data. But when it comes to selling their data for marketing purposes, not for auto approval or loan approval purposes, but for actual marketing purposes, they really only want to work directly with the largest financial institutions. They've got all sorts of, you'll learn if you started to work with them, but there's differences in how they treat the largest financial institutions and how they treat small and mid-sized financial institutions, and that's not the case with us. We look forward to working with all financial institutions, large, small, or in between, and we're going to provide superior customer service. With the bureaus, when you want to get a count, in other words, when you want to find out how many existing customers or potential borrowers meet credit criteria for some type of campaign, when you want that count and you want to know what that cost would be to run that type of campaign, the bureaus are going to take several days, up to several weeks sometimes, to get back to you. We've heard all sorts of horror stories, and you can talk to, coworkers and colleagues at other institutions about that. But I can tell you that we utilize an online interface. It's a web-based interface that queries data from all three of the bureaus at the same time. We can run most counts and estimates literally in minutes. So it would be very rare for us to take more than, a few hours to a day to get back to you. Because once we sit down to actually run that count or estimate, we get the numbers very, very quickly. And we speak in plain English. So, the bureaus, they certainly know their business, but they tend to use a lot of jargon, and they tend to throw a lot of regulations back at the financial institutions that they're working with directly. Well, we're going to break it down for you and explain everything so you can understand it. And the example of that I see quite frequently is when it comes to actually the mail piece design or writing that email message or writing that phone script. When we send it into the bureaus for approval, either it'll get approved right away, which is very common, or the bureaus will come back and ask us for small changes. And they'll just point to a document of, a 50-page document that they have with all the regulations and say, well, the mail piece doesn't, meet this requirement. Well, if that was your financial institution, you're going to now have to flip through that 50-page book and find the regulation that they're talking about. Where when we send it back or get it back from the bureaus, we're going to say, you know what, all we need to do is change this word here or add this sentence to the disclosure, or we need to add this to the letter or to the phone script to get it approved. We're just going to break it down. When it comes to campaign development and fulfillment, we help with that too. So we obviously do more than sell credit data. LKCS has in-house design, printing, mailing, and web services. In addition to providing that data, all of our campaigns are custom designed. So we don't make you select a template, or use one of these three, designs. We custom design and custom write everything. And we can write and design campaign materials and send those print and mail those campaigns, those direct mail campaigns for you, send those email messages. So literally we can handle everything from, getting the data, running the counts and the estimates, to designing the mail pieces and emails and actually sending them all out. Again, we have lots of experience with these campaigns, and we make sure that those materials meet all of those Fair Credit Reporting Act requirements, and get them approved by the bureaus. I had a question that came in that tells me that some of the statements that I made are not true. Again, I've had experience working with a lot of different banks and credit unions, and that's what they're telling me. So it may not be true for everybody out there, but these are the stories that we hear repeatedly, from many of our customers. So I'm using what I've heard from existing clients and telling you. Obviously, again, you certainly have the ability to work with the bureaus directly, and you also have the ability to work with third parties, like us. So when it comes to results reporting, we'll stick around afterwards. We're not, we help our customers after they send out that campaign to measure the results of that campaign. What we find is that a lot of our customers don't find it real easy to actually determine how many loans they closed from a specific campaign. So we can help you actually determine that. We can get some data from you as far as, what loans closed in the last month, 2 months, 3 months, whatever that is, and compare that with the list of people that received the campaign and show you exactly how many loans of the type you were looking for, were closed within 30, 60, or 90 days of sending out this campaign, so that you can, measure those results, and then we'll help you tweak and refine that campaign so that you do even better the next time. We also have better data availability, and that sounds a little bit strange, but when you're working with the bureaus directly, chances are you're going to be purchasing data from one bureau. And what I mean, what we're doing here is we actually, since we have relationships with all three of the bureaus, we have the ability to purchase data from all three of the bureaus at the same cost as purchasing it from just one. And that's really important because the bureaus, obviously that credit data is private information, so they don't share it. They don't even share it with each other. So not all the bureaus have information on everybody. So by querying multiple bureaus, we can get the full picture, and what that results in is actually about a 70% increase in the number of potential borrowers that we can reach for you. I have a question about once we give you criteria, what is the timeline for a list for an auto loan pre-approval? So again, we can run that count within a few minutes. So I'll be able to tell you exactly how many people meet those conditions, and then it's just a matter of us designing the mail piece and all of that. The first time we run a campaign for a customer, there is paperwork that needs to be filed, with the bureaus and things like that, so that there's some lead time there. But once that paperwork is done, once we run a count, literally I can, purchase that data as soon as the mail piece is approved. So these campaigns vary frequently, from start to finish, we're looking at probably about a 2-week time period. The first time, however, is going to be a little bit longer just due to the paperwork process, and we can certainly talk about that. Once that paperwork is done, though, it's done forever. So the tri-bureau sourcing is really important. I have another question about what source do you use for determining a prospect's home valuation when calculating a loan to value in the campaign. So we utilize different LTV models, probably the same models that you may be using in a loan decisioning type scenario where you may be paying $10 or $15 to approximate that LTV. We're actually able to leverage those same models of data for a few pennies. We also have access to all of the county assessors data nationwide, but that's just going to show us the difference at the time, what the home value was at the time the mortgage was opened and what the current mortgage amount is. But we use those LTV, we use a combined LTV model, and actually several models to get that information. So when we talk about better data availability, we're also talking about things like those AVM models that I was talking about. We supplement that credit bureau data with a bunch of other data sources. So we add on lots of different demographic data sources. We add on information from those county assessors' offices and those AVM models that I have talked about. We add on a lot of automotive information as well. So we take that tri-bureau credit, which is obviously a very key component of this, but we also add on all these other data sets. So we can use interest type information and age information and income information and presence of children type information and all of that together to make these offers, again, more relevant to each recipient. Simple things. We can look at the gender of the recipient and change the picture that we're putting on a direct mail piece. Maybe using the age and the gender together so that the image of the person sitting in that new vehicle, if we're sending out an auto loan campaign, is going to be relevant to the age and gender of the person we're sending it to. So all of that plays a difference in response rates, and we use all of this information together. Reason number 5 that you may want to look at a third party is look at some of the minimum charges. So credit bureau data is a volume business. The credit bureaus want to sell a lot of this data. It's profitable for them. And we've seen credit bureau minimum charges to be typically in the range of $2,000 to $2,500 per campaign. Again, talk to your rep at the bureaus and determine what the minimum is for you. But know that we and probably other third-party vendors have negotiated much lower minimum commitments. So where the bureaus may be telling you that anytime you purchase data, you've got to spend at least $2,000 to $2,500 on that campaign, our minimum is only $750 a month, and it's not per campaign. It's data that's purchased within a calendar month. What that means is that within a given calendar month, you can purchase data for multiple campaigns at the same time to fulfill that commitment. So when we talk about pinpoint accurate credit information, no campaign is too small. If you think of that lease expiration campaign, we may only find 50, 100, 200 people in the area that you serve that have a lease coming due in the next 3 months. We couldn't afford to spend, you couldn't afford to spend $2,000 or even $750 to reach those 50 or 100 or 200 people. But if we're running some other type of campaign, whether it's another auto campaign or some kind of mortgage campaign or a credit card campaign at the same time, I can use those two campaigns together maybe to fulfill that minimum charge. So even if there's only 50 or 100 or 200 people and the cost of that data, you know, regardless of minimums, might be $50 or $25 to buy that data, I don't have to spend $750 on it if I'm already buying other data. Together, those campaigns have to equal $750. So the lower minimum charges is a big deal. And again, we can talk about specific situations anytime. And what you'll find is that by going through a third party, you may actually pay significantly less than purchasing the data itself directly. So there, not only is there a minimum charge, but obviously there's a cost for the data to get to that minimum. We've seen pricing grids from the bureaus that we don't even understand, to be honest with you. So, you know, we've seen, and again, this may be different for different institutions, but we've seen grids that, you know, base pricing on the number of attributes or different prices for, you know, different fields of data. If you want FICO, it's this price. If you want this information, it's this price. And this field is this price. They charge to output the files. I mean, there's just all sorts of things on some of these grids that we've seen that we don't understand. The pricing that you'll get from us anyway is very easy to understand. And I'll share it with you here in just a minute. But pricing is based on the quantity of records that you purchase. The number of people that meet your pre-screen requirements, you know, we're going to run that count. We're going to tell you there's 3,000, 5,000, 10,000 people that meet those requirements, or 500 people. And you're going to come back and say, you know what, I only want to buy 1,000 of those, or however many, you know, whatever the budget is for that campaign. And however many records you purchase, that's what you're paying for. It will be very rare for you to see any other, you know, charges based on what fields of data you're using or anything like that. And if there wasn't a case like that, we would certainly tell you, but it's very, very rare. So here are the costs for you. When we look at the cost for credit pre-screen or credit prospecting campaigns, like I said, the primary factor that determines that price is the number of records that you purchase. There are some royalty demographic fields, things like lifestyle type attributes, that if you wanted to use that to segment your list further, that could affect the price by a couple of cents. But that's, again, that's very rare. You know, I can only think of a couple of times that that's come into play for all of the different lists that I've obtained for my customers. And just know that those credit bureau minimum charges that we discussed do apply. But a very good figure to use is about 25 cents per record purchased when you're buying data from LKCS. So for everybody that meets your pre-screen requirements, the whole pre-screen process, the actual credit data itself, is going to cost you about 25 cents. And then on top of that, you would add any direct mail costs or email marketing costs or the cost for you to make outbound phone calls. And we can help you obviously estimate all of that for the total cost of the campaign. But when it comes to the data from LKCS, you're going to spend right around 25 cents per record. We obviously offer free counts and estimates. So if you have ideas, you know, for campaigns, and some of the questions that I've seen, obviously you guys are thinking about some potential campaigns, give me a call, shoot me an email. I can run those counts for you, let you know how many people there are out there in the communities you serve, or we can exchange privacy information and, you know, get you my SOC 2 certification and all of those types of things. And we can actually get a customer or a member list from you and show you exactly how many of your existing account holders meet those pre-screen requirements. And then from there, obviously, I can run printing and mailing estimates or email estimates, anything to get you the total cost of the campaign. But we can show you exactly how many people meet those criteria and show you what all the costs are in addition, obviously to the data cost itself. So these campaigns make a lot of sense, and they typically, we see response rates that are about 3 times higher than a direct mail campaign without the pre-screen requirement. And that's really all I have for you today. So I've shared the secrets that I've learned over the years, and obviously we've discussed what pre-screen campaigns are, and hopefully cleared up some of the misconceptions about them. I'm certainly available to answer any additional questions. I will stay on the line a little bit longer, but please feel free to call or email me with additional questions. So some are coming in, can we order a specific bureau scoring model? I'm not sure I understand the question, but things like auto FICO scores, and things like that are available. So it just depends on which model that you're looking for. There are hundreds of different fields available. I have a question. Can the target audience be narrowed to specific census tracts? Yes. All of the geographic parameters can be put in, so we can certainly narrow to specific census tracts. If you use your own designer to design the mailer, yes. So if you used your own designer, I still have to send it in just to make sure it meets the requirements, but that's a very quick process. I can usually get that done, very, very quickly. So if you did have, if you did design your own mail piece or email, I do still need to send it in for approval, but that's very quick. Yes, Crystal, the FICO auto score is available, and we do use that for some customers. So rather than just using the general FICO score, we can use the FICO auto score. If you're not a community chartered credit union, does this change anything in terms of mailers? No. I mean, again, we can look at your specific member list. So limit this campaign to your existing members. We have some credit unions that are seg-based and actually can get a list of those seg employees for pre-screen campaigns, so it just depends on your specific situation. And how do you determine who is rented? That's some of the demographic data that we purchase. So we've got a couple of different sources for demographic data. So we can, and I can discuss that with you in further detail, but basically we can use that with a level of confidence to determine who is a definite renter and who is a probable renter, things like that. What is your average ROI in the campaigns you have assisted with? ROI varies, and it varies based on the offer that you're making and the market that you're in. So really the best figure I can give you is that we typically see these campaigns to have about a 3 times higher response rate with a pre-screen, a pre-approval type component than we do for similar campaigns without one. So, I can get you numbers and references and all of those types of things, but it really varies, based on how good the rate is that you're offering and, and those types of things. Yes, you can get a copy of the slides from the webinar. I will email that out to you afternoon or later on this afternoon, but everybody's going to get an email with that. Can you confirm you can obtain the propensity to buy factor on an auto loan? So when we look at auto loans, there's a couple of different things we can do for propensity to buy. There are some modeled data sources that are available to help us determine who's in the market for a loan, and we can also look at triggers. And what a trigger is when it comes to credit data is we can actually identify people with hard credit inquiries in the past day, the past week, the past month. So we know that those people applied for a loan. We know they're actively in the market for a loan, and we can respond with an offer of credit. LKCS does offer a credit alerting solution in addition to the credit prospecting campaigns, where on a daily basis we can actually identify for you either your existing account holders or people that live in the communities that you serve that applied for a loan somewhere else yesterday. Then further tell you who, obviously identify, make sure those people meet your credit criteria for that type of loan, whether it was an auto loan or a credit card or a mortgage loan. get you that information and send out that offer of credit via direct mail or email the same day. So we can find out, overnight who applied for a loan today in your market area or that's already an account holder of yours that meets your credit criteria, and tomorrow morning send out that loan offer to them. So that's a different product than the pre-screen campaigns. It's called credit alerting, but that's definitely something. We talked about LKCS could measure the results. Can you describe what the reporting of the results include? Sure. So we have, we can get obviously a data file from you that shows what loans you closed. We match the names and addresses or member numbers, account numbers, person numbers, any of those different fields that may be in your data file. We match those with the data that we had in the pre-screen campaign list and show you which of those people closed loans, what the balance of those loans were, what types of loans they were, what the term of the loan is, what the credit score of the individual was, all of those types of things. So basically, as much data as you can provide, to us about the loans that you closed since you launched the campaign, we can provide back to you, say these are the people that received the campaign, and here's all the parameters that we know about them. Obviously, we can also return all of the credit parameters that we purchased, as part of the pre-screen list. I don't see any more questions coming in, but I will stay on the line. But again, I want to thank you all for attending today. I hope you got a lot of information out of this, and I'm certainly available to answer further questions offline. Feel free to give me a call or shoot me an email anytime. Thank you.